Welcome back to the Tech Talks Daily podcast. Now, today's business leaders are facing a complex and challenging economic environment, and many are facing the decision to either move forward or cease their merger and acquisition activity completely. And today, I have the pleasure of welcoming back Josh Rogers, CEO of Precisely, onto the podcast. We last spoke in 2020, but he's recently set off my tech spidey sensors when I learned that he's actually led the company through 7 acquisitions since we last spoke. So I thought this would be a great opportunity to explore the world of merger acquisitions in these turbulent and uncertain times and share his unique perspective on the current M&A market. So today I've invited him to join me to talk about the current economic environment, evaluating risk, and also a topic that we don't talk about enough is how leaders should communicate acquisitions to their customers and the acquired company's employees. It's something that I think can be improved. I'd love to hear his thoughts on that. But before we start today's interview, I just wanted to give a quick mention to our sponsors, because this month the podcast is brought to you by Flipper, which is the #1 marketplace to buy and sell online businesses and startups. So, do you run your own online business? And have you ever considered selling your website, your store, your tech, or your app? Because with world-class combined matching technology, dedicated brokers and end-to-end services, all at the most efficient price, Flipper is making it simple to sell your online business. So to get a free valuation, visit my friends at flipper.com/techtalks, where each month thousands of online business owners exit with Flipper. Again, visit flipper.com/techtalks. So buckle up and hold on tight, because today I'm going to beam your ears all the way to Boston, Massachusetts, where Josh is waiting to join us once again on the podcast. So a massive warm welcome back to the show, and also 2023 we find ourselves now. And it was 3 years ago since we last spoke, but can you just remind everyone listening with a little about who you are and what you do?
Sure. And thanks for having me, Neil. It's great to be with you again. I'm the CEO of Precisely, and Precisely is an enterprise software company that helps its customers achieve data integrity through a combination of software products, data products, and strategic services.
Fantastic. And since we last spoke, you've led the company through 7 acquisitions, I read when I was researching. Is that right? Because I feel like we've got some catching up to do.
Yeah, I think it's. I think that's right. I think one of those acquisitions may have happened right before we spoke. We were just on the kind of backside of closing and integrating that business, which was the Pitney Bowes software and data business. But yes, we've been busy. We've done additional acquisitions since then to kind of complete and fill out the value proposition around helping customers get to data integrity. Yep.
Awesome. And I think the last time we spoke, it was all about data integrity and building trust in data. And today, here in 2023, business leaders are now facing a complex and challenging economic environment, with many facing the decision to either move forward or cease their M&A activity completely. In fact, before you came on today, I was reading that PwC reports, in comparison to the first half of 2021, deal values have actually declined by 20%. But buyers can experience better values during a downturn and achieve outsized growth as valuations come down. So I'm curious, what did you take away from that report as someone that's been on this path for some time?
Yeah, so I think it's interesting. I think, you've seen obviously a significant rise in interest rates. You've seen, kind of macro uncertainties, and that has led to a significant drop in public equities, particularly in the software space over the last 12 months. And so I think what we've seen is we've started to see those deal values come down. You've certainly seen a slowdown in M&A. I think is kind of valuations reset. And the dynamic there is you have buyers who have exciting, kind of thoughts around what valuation should be in this, kind of more challenging environment. And you have sellers that haven't quite gotten there emotionally. You're starting to see with the kind of coming through November, the 12-month highs go down in the public comps. And so you're starting to see a pickup of kind of take private transactions. And I think that'll flow through to the to the private world as well. And so I think that, and people talk a lot about these valuations coming down. What I would say is they're probably coming back to a more normalized level. And I think there's going to be, great opportunities out there for acquirers to look at businesses that are fantastic businesses that are probably more fairly valued than they were, say, 12 months ago.
And of course, there's 3,000 miles between us today, and even more miles between everybody listening all around the world. But if I'd say the one thing we've all got in common is the uncertain economic environment at the moment. So on that side of things, would you have any advice on evaluating risk and how leaders should proceed with M&As during this turbulent time?
Yeah, I mean, I think it's a great question. I think there's a few different strategies. The first is to, trust the data, really look at the trend lines that you're seeing in targets and expect that those will probably continue. Maybe there's some stabilization, but I do think you need to factor in the economic realities into, how you think a business is going to perform. And certainly, while that may have slowed down, I think it's important to reflect that in the way you think about the business and the expectations, kind of post close. And so, I think that's the process that buyers are going through. And I think, over time, sellers will kind of adjust to that kind of new reality. But building we always try to build, what we believe to be a realistic and probably just on the side of conservative business case as we think about valuations. And sometimes that doesn't quite support, a seller's expectation, but it leads us to being disciplined buyers and making sure that when we do close a transaction, we feel really confident in our ability to both capture the expected value, potentially participate in some upside to that, and most importantly, kind of protect to the downside. So.
Yeah, 100% with you on that. And of course, one of the problems that many make, especially during a period of uncertainty, is forgetting the fact that when we mention acquisitions, it can make customers and employees alike very, very nervous. So how should leaders communicate acquisitions to their customers and acquired companies' employees, just to put everyone at ease? Have you seen mistakes around that, and how would you advise they manage that?
Yes. I mean, we've done, I think you said 7 since we last spoke. Yeah. I think, during my tenure as president and CEO, and I've been, that spans about the last 10 years, we've done about 20 acquisitions. And so we, have a few kind of reps, if you will, around kind of how to think about this communications process around an acquisition. And what we've kind of landed on is really just be as transparent as you can. Yeah. And when you build the case for the acquisition, that is going to sit on a set of assumptions around what you believe the go forward kind of revenue picture looks like, where you think you can get good cross sell or revenue synergies, what you think the cost structure is going to look like. And what we found is, particularly to kind of acquired employees, is the best thing you can do is to be very clear on what those value drivers are and explain the logic. And we just think that is builds trust with the folks that are entering the organization. It also is a good way to kind of engage them in the key goals for the acquisition. And then as it relates to customers, we have a philosophy of really focusing on supporting customers. And so while there may be product plans that say, hey, we're going to take this product and improve it, we tend to really focus on how we're going to continue to support customers and not put them in a challenging position by, stop supporting certain product lines, et cetera. So we really never stop supporting a product. We may increase or decrease investment in a product given growth prospects, but we always want to support customers. So I think, key message to customers is you are going to be supported and have more opportunities and innovation going forward. And then the message to employees is, here are the kind of key assumptions and goals of the acquisition. And this is how we, hope that you can participate and really kind of try to motivate them to understand that there's a significant opportunity associated with the acquisition for them to develop their career. And that's what we've seen when you do these acquisitions. at some level, the thing that you're buying is the talent and expertise of the what we call the target organization, and really what you want to do is have a clear plan for how to leverage that going forward and tap into that innovation. And what we found is fundamental to that is being very transparent and honest and straightforward.
And as someone that has been through 7 acquisitions in 2 years, what would you say have been the biggest lessons that you've learned in leading precisely through this period?
Really, the communication is the key. There are strategies to get the deal closed, and we tend to focus around what we call speed and certainty, which is be very clear on what we are willing to pay for a company and be very aggressive about the timeline by which we can, sign and close a transaction. And that tends to help kind of build confidence in the seller's minds around choosing you as the party to transact with. But then post-close, it's really around communication, explaining the rationale for the deal and the combination, explaining the opportunities for growth, both for the business, but also for employees. And then I think something that we've spent more and more time on from an integration perspective is around just thinking through cultural differences of the organizations and being clear about those. We actually have started doing a kind of a cultural survey to make sure we understand the culture of the business that we're acquiring and how that might differ from our culture or might be similar, and then being very upfront about that. And we see that is something that also continues to kind of build trust and gives acquired employees a roadmap of how to navigate the new organization and what things will work well for them.
Fantastic. And I appreciate you probably cannot share anything around this at all, but I'm going to try and get a few teasers out of you. Are there any, or is there anything you can share around your company's acquisition plans in the current market?
Sure. I mean, look, we've been pretty active over the last several years, and we continue to believe that M&A is a strategy that will continue to fill out the capability and the value proposition that we can offer to customers. And so we'll continue to be active. I would say right now we are monitoring a number of interesting opportunities and looking to see if really from a valuation perspective, do those things come in line with what we think is reasonable. We did see over the last, call it 12 months or so, that things got pretty frothy, and I think we're patient, and we do have the benefit of having been in this market and been active from an M&A perspective for a decade, and so we do understand the opportunities out there, and we think we have a good sense of what fair value is, and as we see things come in line with that, we will act. There's nothing specific I can say about that, but it's certainly a key strategy that's driven a lot of value for customers for the last decade, and we think will continue to drive value for customers over the next decade.
And just moving away from that for a moment, we're at the beginning of a new year. Everyone's talking about a lot of different technologies at the moment, such as ChatGPT is a big one everyone's talking about. But I'm curious, is there anything or any tech trends that excite you right now as we prepare for a new year?
Well, I mean, the first is, and this is been a trend for obviously a while, but I think it's really accelerating, particularly in the data space. It's just around cloud and SaaS. We signed an agreement with AWS around their mainframe modernization service late last year, and I had the opportunity to be at reInvent, and it is just really amazing to see how customers are embracing cloud as a way to modernize various workloads and kind of create platforms that can do more advanced analytics. And certainly that's what the keynotes and the themes of the AWS conference were. And we obviously participate in that. And so that's one, and kind of the adoption of our data integrity suite capabilities. Will continue to roll out new capabilities this year. And so we're very focused on how to help customers kind of modernize and advance their analytics. And part of that is, how do they achieve data integrity, not only in their on-premise environments, but in their cloud environments, and frankly, manage those data integrity requirements between the two, because, at the end of the day, all of our customers and large enterprise have to navigate this hybrid world where they are creating data, both on premise and in the cloud, and they need to figure out how to route that data and clean it up and make it usable in both those environments. And so we think that's a huge opportunity. And the second one is AI. There's a couple of different kind of themes there. The first is, as customers look to build machine learning models, look to use AI to kind of automate decision making, the importance of high quality or high integrity data is only goes up. And so it's a key demand driver for our solutions. The second piece, and perhaps more interesting for us, is that there's an opportunity to use AI as a part of our, as features in our products, or to power features in our products that helps accelerate that data integrity process. And so we're investing a lot kind of across the board, whether it be data integration or data observability or data governance, to help data quality, to help kind of automate some of the previously very manual decisions and judgment calls that users had to make to achieve, high quality data. And we think we can accelerate that through introducing AI-driven features in the products.
And also, I think frequently when we're scrolling down our smartphones, it can be difficult finding positive tech stories. So to restore the balance there, is there anything that excites you most about the role of technology, not only in business, but also our life and even world this year?
Yeah, one of the trends that we see that I think is a real positive is really around ESG. And you see, not only enterprises and key leaders and kind of leading enterprises, but also government agencies starting to put a bigger focus on making sure that businesses think about all of their constituents, not just shareholders, not just employees, but also the impact they have on their community and environment around them. And we're seeing that take hold in the form of, very formal ESG programs. And one of the first steps there is to establish a baseline and then measure against that, whether that be the environmental impact or that be kind of the social impact from a diversity and inclusion perspective. All of that baseline really comes from kind of measuring data elements that historically organizations may not have measured, or if they have, it's been in an ad hoc and very manual way. And so we see a lot of customers that are standing up new data platforms to help measure ESG initiatives. And I think that's a really positive kind of movement in enterprise governance generally, and specifically in the data management space, where these technologies are being applied not just to manage customer loyalty or revenue growth, but to manage environmental impact. And we're working on specific features and skills in our services teams to help support customers' ESG initiatives.
Well, a huge thank you for coming back on the podcast to join me today, Josh. I'm going to see if there's something we can do for you now. So some of the biggest names in business, VC funding and tech have either been guests or have listened to this podcast. So if I was to say, is there a person you'd love to have a private breakfast or lunch with, who would it be and why? And we'll see if we can manifest something together.
Sure. And that's a great question. It's easy to go after, Elon Musk or Sam Bankman-Fried. There's a lot of interesting characters out there that I'd love to kind of understand some of the decision-making process they went through. But honestly, I would tell you, as we've gone through, a really challenging time with COVID, and now this kind of economic uncertainty and increase in interest rates. The person that I always come back to is actually the founder of Precisely, or really Syncsor, which is a predecessor organization, a gentleman named Asa Tavidian. And he started this business in 1968, was an Armenian immigrant, ran it for 40 years and was on the board. And he and I got to be very close. He passed away in April of 2020, kind of at the peak of COVID. And he sent me an email about he was thankful that I was leading the organization and wished me luck leading it through kind of the initial stages of the pandemic. And so if I had the opportunity to sit down with him now, which of course I don't, and kind of let him know how well the business is doing and how I think the opportunity, frankly, is bigger than it's ever been, for Precisely, I would just really cherish that opportunity. So that would be my answer.
Wow, that's a beautiful and very poignant moment to end on. But before I do let you go, for anyone listening wanting to find you guys online, contact your team if they've got any questions or just explore any of the topics we talked about today, what's the best starting point?
Sure. Precisely.com is our website, and we're available on all social channels under Precisely Trust and Data. Find us on LinkedIn or Facebook or Instagram or Twitter. And please reach out. We'd love to chat with you and tell you about how we can help on your journey towards data integrity.
Well, after leading Precisely through 7 acquisitions and the company's acquisition and talking about the company's acquisition plans in the current market, cannot thank you enough for sharing your insights there, particularly about how they should communicate with those acquisitions to their customers and companies' employees. So many big talking points. But more than anything, just thank you for coming back on, sitting down with me and having a good old-fashioned catch-up. We won't leave it 2 to 3 years before we talk again. I promise you that much. But thanks for sitting down today.
Thanks, Neil. I appreciate it. Thanks for having me on.
It's always a pleasure to have Josh back on the podcast. I think we covered all topics around mergers and acquisitions in an uncertain and turbulent market, but I also enjoyed exploring tech trends and what excites Josh at the moment. And I think we ended on a beautiful and poignant moment there with his answer to who he wished he could have that breakfast or lunch with. But over to you. These are the stories that I loved sharing on this podcast, and I'd love to share yours too. And whether you want to add something to the conversation today around mergers and acquisitions, maybe we missed something, maybe we said something you disagree with, or maybe you've got your own story that you'd like to share, whatever it is, email me, techblogwriter@outlook.com, Twitter, LinkedIn, Instagram, @NeilCHughes. I don't just say this, please, send in your thoughts. But that's it for today, I'm afraid. Another episode is done. I'll return again tomorrow with another guest, but thank you for listening. And until next time, don't be a stranger.